right, ladies and gentlemen, we are back for another pre-market prep. Now, remember, if you're watching this prep and you think you're looking at this data a little later than usual, don't think that at all. We go through each and every ticker. We go through each and every indice. We go through each and everything that might be a very clear and volatile uh, 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 a clear and volatile piece in this market. It's all a puzzle, guys. We want to put these puzzles together. And if you learn how a real trader does that in real time and you pay attention to exactly how I do it, write down the steps, write down these steps, and you will figure out how you can become a better trader. The preparation is the key. If you just start painting a wall without ever putting up tape or without ever laying down a cover so you don't get paint everywhere, it's going to be a mess. And if you feel like at any time your trading or the way you're looking at the market is a mess, well, it's because you have not done the pre-market prep. You haven't put down the tape. You haven't put down the blanket so you don't get everything everywhere. Okay, so let's not make a mess. Let's jump right into this, guys. We have the S&P 500. We're going to run through the indices and what I like to look at. So we're going to go through the S&P 500. And if you guys have any questions, you're more than welcome to ask them. I got right now, everybody's in the Discord. We go through this every single day. We're going to be switching everything up. We're going to be doing this at 9 p.m. Rather than in the morning, so we can get more people in, more people watching, and help more people out. So we have the S&P 500 here, guys. If you watched my YouTube short last night, I talked about how we need to be very, very careful here. Why? Why do we need to be careful with this? Well, look at this. It's going straight up. There's gaps in between here, right? There is gaps in between here. Now, it's given us a great area where we're above a 50-day moving average. We're above all key moving averages, but we don't want to see this. We don't want to see this here go straight back down. So what do I want to see? Some sideways action. Okay, spoiler alert. I want to see some sideways action. Why do we want that sideways action? Because it shows that people are getting out when they don't want to be in things anymore. It'll show people buying and acting as support, selling. It'll just give time for everybody in the market, whether it's a retail trader or it's institutional ownership buying these things up. It'll give everybody time to get where they want to be before it heads up higher, or unfortunately it could head on lower, right? Well, right now we have to take what the market's giving us. What is it showing us? We're above all key moving averages. We're up here above that 50-day moving average that we had found as resistance. We bounced off that key area. We've created new higher lows. I would like to see one more new higher low. So if it can come back and retest this 50-day moving average, that would be a great new higher low. I would highly respect that. I have a feeling that we still have plenty of room to come back down, say to that 510 before ripping higher. But again, if anybody tells you they truly know what's going to happen, you're listening to the wrong person. Okay, what we do here, instead of predicting, we react, right? We give ourselves a couple of key scenarios here. What could happen? Well, if the S&P 500 has just been rip, tater, chip to the north side and blew through all these levels, well, one scenario is it could continue higher, going straight up to all-time highs and then pulling back, right? Another scenario is we could pull back here and find support off the 50 and bounce around for a little bit, consolidate, right? Those are my two scenarios. I don't see this thing going right back down to where it came from, or we may have made a new lower low here before bouncing up. I personally think that we are almost in the clear. I think some sideways action, but one issue that I brought up this morning in the Discord, this volume here, we're not seeing a lot of volume to the north side, but we're seeing a lot of volume to the sell side, okay? That right there will give me a little bit of the jitters. We don't want to get fully on the gas pedal. I only got one foot on the gas pedal. I don't have both of them smashed down. I'm not revving the engine and throwing it in first, right? That's a reference for you, B. Stewie. we're not taking off that line as quick as we possibly can. So next, what I like to look at, guys, since we're going to run through the indices, is the QQQ. Now, this is your tech-heavy QQQ. Okay, we're going to take a look at and see where it's at on the hourly as well. A little bit of, excuse me, guys, a little bit of sell-off in the morning, but it's still holding up. It's still looking well. It's looking like the rest of the indices. So the QQQ is doing very, very well. above everything, above all moving averages. We want to see these 10 get over the 20 and the 30. We want to see the 20 over the 30, and then we want to see all three of these over the 50. And if we have another good day or even some sideways action, those will start to converge in the right areas. We also have IWM, guys. IWM's looking really good. We're starting to get back up to those highs, the highs of 2023. Now the highs of 2024. We're getting back up to that area. This is an area of resistance, though. We do need to keep that in mind. We are in an area of resistance. This 205, 206 area is going to be an area of resistance. That's why I have it marked out for you right here. You can look on the hourly up here. You can see multiple times, 1, 2, 3, 4, 5. No point in counting that much more. But yeah, this 205 area is going to be an area of resistance. We're going to see if it wants to hold out here. I don't know how well you guys can hear me, but we're going to put the microphone up here now. I bet that's a little clearer. All right, so with that being said, we have the SPY, the QQQ, the IWM. So now we want to look through some of the other indices like the NASDAQ and the Dow Jones. All right, so here's the NASDAQ. This is the futures. And you can see it's looking a lot like everything else, right? We found support. We're above moving averages, okay? We're not going to just sit here and dwell on these if they're all the same. Dow Jones Industrial, your grandfather's stocks, your Coca-Colas, your Amazons, all the big boats above a 50-day moving average as well. SMH, so this is your ETF sector for semiconductors. Again, above a 50-day moving average, looking very strong here. These moving averages are starting to line back up. We still have some time on it, but we'll see. If you're new to this channel, I like to look at the RSP, which is the equally weighted S&P 500, meaning we don't give all weight to one area. We're not saying, well, tech is doing so well, the S&P 500 is being held up by tech. We can look at the RSP to see that RSP, if it's equally weighted, we can see that there's breadth in the market. Now you can see here, we are still below that 50-day moving average, but this looks very, very constructive here, being equally weighted in this market if it gets above there. I've been seeing a lot of setups lately. Yesterday, I seen a lot more setups than I'm seeing today, so that might be a change in character that we might want to keep in mind. But this RSP is looking constructive. Let's see if this 50-day moving average is going to show resistance, or if we can actually get through this, maybe even trade sideways for a little bit underneath it, letting that institutional ownership buy it up every time it pops back down, and we can break on through. Now, the dollar we've seen just pulled way back. It went from these highs at that resistance. If you guys remember, we talked about resistance at 106.46, and then it pulled right back down here, right? Now it's bouncing off this 50-day moving average, and it's just trading sideways. It opens up at 8:30, so the market has been open for the US dollar, the Forex market, if you will. It's been open for a few minutes, and you can see it's dropping like a fly. First thing this morning. Now, we still have a lot of time to go, but that is very nice to see. We want to see the dollar go down. It's an inverse correlation to the S&P 500. So if you're not watching the dollar, you don't need to trade off of the dollar, but it's nice to know that the indices that we're watching, with the dollar that we're watching, the VIX volatility, it's all lining up. If it's all lining up, it'll give you more confidence and confluency in taking the trades that you want to take, okay? We also have Bitcoin, guys. So Bitcoin broke this downtrend. It broke above. It came back. It retested this area of downtrend, and now it's starting to head back up. So that's good to see. And we want to see this continue higher for any of you Bitcoin heads. We got to call you guys something, though, right? Bitcoin heads, that's just doesn't sound that cool. You Bitcoiners, any ideas in the chat? What should we call those guys? I play Bitcoins. I'll play the Bitcoin Future Minis, but I am waiting for the right time to do so. Right now, I don't personally think is the right time because we're downtrending. Until we get correlation, sure, this might be the best time to buy, but we are still downtrending. Until we break this area, this 70,000 area, that would be an area where I might find interest. So we're going to wait and find out. Now, gold. Gold, I have been talking about. I'm bearish on gold. My issue with trying to get into this is I'm not finding the best time to get into gold to short it. But I will have to say this. As of yesterday, it showed some constructive some constructive movement. It broke this downtrending area, and I even said when this happened when we were in the Discord, which by the way is absolutely free. You can check it out in our description. Everything I ask of you is only your time, never your money. So hit that like, hit that subscribe button. We are here all the time for you guys, whether it's in the Discord, whether it's in YouTube, TikTok, Instagram, Facebook. I mean, we are all over the place. Shout out to my moderators and our editor. So gold, we've seen this break up through here. We were talking about how, man, I really want to get into this, but it just goes against my biasy towards the short side. So I just kept hands off, just managed my trades, which we'll go over very, very soon. Now, this is what I really find very, very interesting, guys. We've been talking more and more about the VIX. If you don't know what the VIX is a volatility index. If you don't know what volatility is, it just tells you the shares that are being traded. So the shares that are being traded, and if there's more shares being traded, the higher the volume. Usually, if there is a huge influx in shares being traded and it just rips, right? If this volatility rips, I call that a fear gauge. The more shares that are traded isn't always a good thing. Usually, if it's a consistent amount of shares being bought, it usually means that it is in a very safe area. But usually, if there's a high amount of volume coming in, that means traders are scared and they are selling very fast. Okay, so this right here was a huge area, a huge downfall. This was part of that bloody 6-day sell-off that we seen a couple weeks ago, and you can see it in the volatility index. Now the volatility is sitting down here at 1347. It's looking like this is looking really, really good, guys. This is what you want to see. You want to see less volatility. It has an inverse correlation with the overall market. Dan Bob asks, what is gold ticker? So I actually look at the gold futures, which is /GC. That's going to be your gold futures. This is like down here's the daily, and you can see the way it trades and how it moves. Now there's different things that you can look at. There's GOLD. You can look at that. It follows not similar at all, but that's Barrick's gold. You have GLD. You can just type in GLD. That would be the S&P 500s. It tracks the futures. So GLD would probably be your best prospect to look at. I just look at the gold futures. It just brings everything in a little bit better. So GLD would probably be your best bet, Dan Bob, to keep on your charts there. Okay, yeah, absolutely, Dan. So guys, I just want to double back on this. Okay, let's double back on this. So the S&P 500 is heading higher right now, right? So it's holding all of yesterday's gains, which is mind-blowing, to be honest with you. I would like to see this pull back today. I'd like to see, and I don't mean that in any mean way. I have money in this, and we'll go over my current accounts. But I just don't want to see us go straight up. Like it's not a good look in my personal opinion. It's not a good look. If you look back here on this daily, guys, look at this. When you look back here on this daily and you pop and then you can pump, right? But then you pull back, you pump, 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 you pull back. We don't want to pump, 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 pump the jam. What am I doing? What am I doing here right now? No, but we don't want to just continually just go straight up. If it goes straight up, guys, I promise you it's going to come straight back down faster, sometimes harder than what it went straight up, because these are all people fear missing out, buying in, fear missing out, buying in, fear missing out. The second we get the start of a downtrend, people are going to panic sell. They're going to say, oh, no, I was wrong. Oh, no, and it's just going to just tank. We don't want to see that. We don't want to see that. We want to see relative strength. We want to see the market continually and gradually going up. So Sure, I'm happy with what we have. I'm happy to be above a 50-day moving average, but I'm not happy that we have all these big gaps in this S&P 500 here without nearly as much volatility in between these gaps, not to mention during the day. So when we had Danny in here, he did bring up a good point. There's not a ton of volatility in here because there was not a huge catalyst. There wasn't a bunch of news. There wasn't, the Fed rate cuts. There wasn't, Papa Powell coming out and talking. There wasn't CPI index. There wasn't PPI or anything like that. We don't have anything like that coming out until Thursday, I believe. I'll have to relook that up, which we can do right now, actually. So, guys, the next thing I like to do before the market opens is I like to bring up this investing.com economic calendar. I filter this out so we're only looking at the United States and the highest volatility. Very easy to do. So tomorrow we have the crude oil and the 10-year note auction. Okay, today we have nothing. So we know that there's not anything that we need to worry about at 8:30 or 9:30 coming out. But this week on Thursday, we have initial jobless claims. Now I know from the past that initial jobless claims can be very volatile. We actually want to see this number being higher than 211. The reason why we want to see higher jobless claims, meaning higher unemployment rating, is because it will actually show that old Papa Powell's Fed rate stays at 5.5% are doing their job. Okay, so that we have to wait till Thursday. On Thursday, that's when we're going to get that in. On Thursday is when we're going to see whether or not those initial jobless claims come out higher. So today we have nothing to worry about. We can clean our hands of the data. We don't have to worry about something volatile coming in right before you take a position and then it dumps, or goes higher. So that is that. So now let's double back again. We went through the indices. We went over the equally weighted S&P 500. We went over the VIX volatility index. We went over the dollar. We went over some more of the hotter commodities like gold and oil. Let's go over oil really quick. Okay, oil. It looks like it's still on a downtrend. We can even make this downtrend out here for you. Okay, I use XOM because it's the biggest weighted in any of those indices. So now let's go over some of the hotter stocks out right now. Okay, if you guys remember, I was shorting UAL at the top here. My whole objective on you. Okay, let's start by saying this. We're going to look at airliners. So travel. Thank you, Dan Bob, for creating this watch list for us. Last night I gave him a quick task and he made short work of it. Absolutely perfect. And got me the ETF that I wanted and everything. So we have UAL, and we're going to go through all these hot sectors right now, okay? And then you guys from here can figure out what you want to do with these hot sectors. Now, if you guys remember, I was shorting UAL because of the multiple tops that came here. It came straight up after its earnings. It smacked into this top. My whole objective was to hold on to this until it hit its 10-day moving average. It ended up doing that. I did not take this short nearly as clean as I wanted to. Sure, I made a couple of grand on this trade, but instead of just selling it here and then buying it and covering it back up here, I kind of gotten shaken out a little bit. So, I sold a little into this and then I stopped out. Then I sold into this and then I stopped out. I sold in, and it wasn't what I would consider a professional trade. Sure, I made money, but once you've been doing this for a while, you'll start to realize that it's not as much about the money. It's more about your process. You want to do it in the least amount of steps. You want to do it the safest way and the most professional way possible. And if I would have just continued with my short right here at this yellow line and just held until it touched the 10-day moving average, and I have plenty of YouTube shorts on there. You guys can go back and watch exactly what happened there. It was great. We made a lot of money in this, but I could have made it a lot easier. I could have made more just by sticking to my setup, and not worrying about it. Just literally holding on till it touched the 10-day moving average. And, I always say this, guys, you're a loser unless you learn, right? That's right, baby. You're a loser unless you're learning. And so we want to learn from this. Now, sure, I made money and I could just wipe my hands clean of this and I could say, hey, I made money. Look at me. I'm the greatest. But I'd much rather look at this and say, how could I do it better? I'm proud of myself for what I've done, but I want to be better every single day. I want to get better, and I want you guys to get better too. And I know if you're listening, if you've made it this far in this video, if you made it this far, just like everybody in the Discord shows up, they show up and they do this. If you've made it this far, you can clearly tell that you want to get better. That's the thing. We can tell that you want to get better because you've already made it to this point. If you haven't hit that like and subscribe yet, well, then you're doing yourself a disservice. How about that? Yeah, really sold you on that one. Anyway, guys, so UAL is popping back up here, okay, bouncing off that 10-day moving average after getting tight. Now, let's look at the ETF. So the ETF and JETS also looks like it's creating these new higher lows. So you got this, 1, 2, and 3. 3 new higher lows. Now, this is the area it needs to break out of. We're going to go ahead and set an alert right here so that way everybody knows when it does happen. We're going to keep you safe in this market. We're going to keep you knowledgeable and aware so that way when it does break out, I can say, hey guys, JETS broke through. Let's find our longs. So we looked at UAL, right? Let's look at a few other airliners. We have JetBlue. Okay, JetBlue not looking nearly as strong. Not the strongest here. Down right by that 200-day moving average. We do have this breakout area set around 756. We have ULCC, which looks like it's also trending down pretty hard. We have DAL. Now, DAL or Delta does look like it's broken out here, guys. So Delta was just trying to chop around here for the longest time, and now we're on a clear uptrend. So we could have just marked this out right here, and you can see this is the breakout area right here, and it's taking off. So now, this is what I want to tell you guys though. Okay, say JETS does take off, and no pun intended actually on that one. Let's say JETS starts to fly away. DAL is going to go even higher, right? So if we can give DAL, say, a chance to create a trend at some point in time, I don't know where the trend's going to be, but let's say the trend's here, and it smacks into some resistance and it trades sideways and it gets tighter here, and then it breaks up through this trend, that's going to be my area where I'm going to want to take a bid. But I'm not going to take, no way in hell, am I going to take a bid when this 21-day moving average is its clear support. Look at all the way back since January 31st. So we'll just say February 1st. It's shown that this 21-day moving average, this red line, anytime it comes back down here, it gets soaked right back up, guys. So why would I want to buy here when it's most likely to come back down and touch this trend line? Pay attention to that. Always look back and see what its most recent support was on. And you can clearly see it's trending on this 21-day moving average. Now it's getting a little extended. We're going to wait for this thing to come right back down here and bounce off that 21-day moving average. That would be the most appropriate time to get a buy. And if it can form a base as well or a trend break as well, that's only going to add to my conviction. So DAL is definitely on that watch list. Now we have American Airlines Group, AAL. Okay, it's downtrending as well. AAL as well in the downtrend. So not as important. And we have ALK. So now going through this, guys, we can see that airliners, I keep calling them airliners, but air travel, seems that a lot of these are in downtrends. We should even let's put in BA on here too, just because that's a fun one to watch. Also in the downtrend, right? So we can clearly see that this sector started warming up yesterday, and it still has a lot of time to work. The only thing that's really looking good is the ETF JETS and DAL, or Delta Airlines. Next up is going to be China. China's BABA looks like it broke out on this daily downtrend, and it's wanting to hold this area. They do have, remember guys, remember that we have this right here on the 14th, which is their earnings. So keep that in mind. We're going to keep an eye on that. We also have NEO. Okay, I know this is a fan favorite, guys. There's some people out there that absolutely love Neo. Let me be the first to tell you this, and don't get mad. If you get mad at something that I say, just keep in mind you need to ask yourself, why does this make me so mad? But Neo is a shit stock. I mean, I'm not gonna lie, guys. If you look at Neo and you see this huge downtrend, it can't get above a 200-day moving average. It's got a lot of proving to do. So regardless whether you love this stock, if you love the stock, it's probably because you got a bunch of money in it and you can't hate on it, right? Well, I don't have any money in this, so I don't have a biasy, but all I see is a downtrend. If this thing breaks above a 200-day moving average, starts making new higher lows on volume, I won't be saying this about Neo, but right now we're in a huge downtrend. It's a shit stock. And if you're a newer trader, you don't need to be watching these stocks. Find something that's above a 200-day moving average that's creating new higher lows and forming an uptrend to the north side. That's going to be your best bet while the overall market is in an uptrend, okay? You really need that. I mean, rewind this and listen to that again. If you're a newer trader, don't be playing stocks that are below a 200-day moving average. Play stocks that are making new higher lows that's above a 200-day moving average while the market is in an uptrend, okay? If you don't understand that, if you don't understand what I'm saying, you need to take time. You need to learn Stan Weinstein stage analysis. Start reading books like How to Make Money in Stocks. Start listening to stories like How I Made $2 Million in the Stock Market by Darvis. Start reading books like Anna Cooling's Volume Price Analysis. There's just a ton of things that we can learn here, guys, and that right there is just such a key point. It's a key point there. So Neo shit stock, but in the near future, I do hope that it can pop up and start proving itself, and we will see. My boy Dan Bob said Neo needs USA chips to prosper. And I don't know anything about the news when it comes to that, but if that's true, the restrictions that we have put on Neo, that the Biden administration's put on China, I should say, is going to have some big implications as to why Neo is going to have a hard time getting off. Next up in the China sector is PDD. This is also internet retail. PDD had a beautiful debut, popping up here, pushing up higher. My question is, where is it going to show? Excuse me. Here, let me take a sip. That's good stuff. I wish Monster would support me. That'd be great. Get free energy drinks, and they could pay me. I'd get a big Monster tattoo on my chest. I'm just kidding. Anyway, guys, we got PDD. It's trading at 138.64 right now. It's looking pretty good, but it's a little premature to try and grab this. This is more of a fear of missing out trade. We want to see it make another new higher low. So here's your low, new higher low. Let's see one more new higher low being put in here, and then let's see it trend on something. Right now, we're not seeing it trend on any of the moving averages. Not to say that it had before, but we can see if we do get some support on those moving averages, it'll be much easier to try and take up a bid. We have a few more. We're going to run through these a little bit quicker, so pay attention. We have the restaurant, Kava. Love seeing Kava up here. It took off without me yesterday, but it did pull back. It's starting to range around here a little bit with earnings coming up very soon. We want to see what Kava can do until then. If you guys were with me in the Discord after market open, this was rough. This was rough. When this took off without me, I was so distraught. So I just couldn't look at it the rest of the day because, anytime we start to get emotional about a stock or a trade, you got to step away because then you're going to start making bad decisions. And I'm glad I didn't, because if I would have bought, I'd either be right back down to break even or worse, I would be stopped out. Next up is CMG, looking very constructive as of yesterday. A nice push up higher. We're going to see if this wants to continue. I believe Chipotle is the leader in the restaurant business. So if you don't have these on your watch list, you need to make a watch list of your retail restaurants, okay? Dragon Ball Z or Domino's Pizza. Every time I see DPZ, I think Dragon Ball Z, even though it's DBZ. But Domino's Pizza is looking very good, kind of like the same chart of CMG. We have EAT, Brink International, just rip tater chip to the north side. After its earnings, this thing just soared higher, much higher, looking very good. We have FWRG, First Watch Restaurant, just trading sideways here. It's going to need to get through that $26 area. We're seeing a lot of volume coming in for this stock, so it looks really good. I have Loco on here. Loco went loco on me when it popped up there around that $12 and sold off pretty hard. There was a lot of resistance up there at the top. So Loco's got a lot more proving to do, although it does have some volume coming in here. Maybe it can shape up and head to the buy side or the north side. We also have Sweet Green here, guys. Sweet Green is earnings is just in a couple of days. So what's that? Thursday, Sweet Green's going to come out with their earnings. We're going to see what wants to happen. Shake Shack broke out yesterday. And when I say breakout, I mean it broke out of that base and then pulled right back in. So we're going to see if Sweet Green wants to be able to hold on. We also have Wing, which I'm telling you is a major leader, along with Chipotle. So Wing is a major leader along with Chipotle in this market. It's nice to see that. TXRH is also, Texas Roadhouse is showing a huge push up higher. So that's really nice to see TXRH. So if you guys don't have a restaurant watch list, go back through there. You need to watch it. There's only, I'm going to go through the shippers, but I'm just going to show you this one shipper. Shippers are looking pretty hot. We want to see this get tight. I took a trade and we stopped out on this yesterday. When it broke out of this area, I got about 600 shares and stopped out for that same day. Of course, it cut, actually, no, I stopped out of its low of when I took it. So I stopped. I lost $81 on this trade, which is absolutely nothing. I'm happy I took it, and I'm more than happy to see this thing get tighter and then break out to the north side. So we'd love to see that continue on. So SHIP is still on my watch list. I'm still willing to play SHIP. I want to see this thing shape up and head to the north side. So we'll see what's gonna happen there. Let's see. Oh, Nylish, good morning, Nylish. Hey, congrats on your run, Nylish. What did you run? Was that a 5K or was it a triathlon? I think I seen you on a bike, but I seen you out there getting it, and you're muted, by the way. Good morning. Oh, that's right. Very cool, man. Yeah, it's nice seeing you out there getting it, man. You're really killing it, and I've always wanted to do something like that. My wife's done plenty of marathons and 5Ks and stuff like that, but I've never actually. I mean, I've done a 5K, but on my own. Never actually did the race, and I've never done any kind of biking. So when I seen you doing that, man, and what a beautiful view too to do that at. So awesome job, by the way. Perfect. Uh-huh. Absolutely. Yeah, that's awesome, man. I just recently visited New York probably 3 months ago, and it was chilly. We bundled up for it, but it was a beautiful sight. I'll never forget those sights at New York. I feel like if I ever go again, though, I got to take my whole family because there was so many cool little playgrounds along the water there that I really wanted to stop in and show my family. But okay, anyway, guys, let's finish this up really quick here. So we have the retail internet. Well, we need to look at CPNG because CPNG's earnings, I believe, are coming out today. That's going to actually be after the market. So after market, what time does that say? Let's see, 4:30. So CPNG should be a very interesting one because it not only popped up on volume, but it also held through all of that selling off that we had in the overall market. So it's beautiful to see CPNG. Of course, we have Amazon, which is part of your retail internet. And look at Amazon, guys, almost breaking those all-time new highs. So that's very beautiful to see for Amazon here. We want to see this to continue and try and get through those highs. And we already went through PDD. So there's a few other things we want to look at before we cut out on the recording. And then what we'll do is we'll just I'll be chit-chatting with you guys in the Discord after a quick break. But let's take a look and see if we have any rippers here. Let me bring this back. Okay, nice pop on NUWE, but nothing too crazy. This NWKS is looking good. Let's see how it did on its earnings here. -3, -2. Nope, not anything I'm interested in. SELF popped up, but on what? Some kind of news or something? What is this? Right into resistance though, so I'm not too happy with that. ZET, ooh, what's this? No, not high enough on the earnings. So what I'm doing, guys, is I'm just looking at what's popped up over, 10%, and I'm looking to see if their earnings give me a great deal of interest. So negative 0.05%, and then they've actually gained 0.0%, 7%. And I want to see that it's gapped up over an area of resistance, not gapping into resistance. So those are the two main focuses for me on these. OSCR. So this is a good one. This is a good one. Let me look in deeper into this. Okay, so this is a good one. This is going to be on my main watch list. I need to pop this on here really quick, guys, so bear with me. All right, it's already on there. Need to talk. All right. So that's going to be my main watch, OSCR, because of its pop-up. It also has what I would consider blue skies because this is from 2021, so I'm not going to expect this to hold too much weight. It's also popped up on, well, let's see, hasn't really been beat. Okay. All right, well, let's see here. Before I let you guys go, I just want to go over what I'm holding. So we have good old Uncle Tesla here. Uncle Tesla looks like it's actually holding up this area. Of course, I don't want to see old Uncle Tesla pulling back like it has in the morning, but at the same time, we can't see this thing go straight up. So Uncle Tesla right here, let's just take a look at where I'm at. I'm still up $98 on this, but so far this morning I'm down 82. So we've lost a little bit of money on Tesla, but we're still up overall in the trade about $100. So it's nothing big. I'm actually just going to hold on to this thing for break even. I've already got some of my money out on Tesla, so I've made probably $100 already on Tesla, and I'm holding this last 25 shares for the dream, guys. I'm holding this onto this for a positional trade to the north side. As you guys know, I don't usually trade anything below a 200-day moving average, but I tried to catch this because the overall market started to set up well. Tesla started trading on higher volume, so I caught a bid down here in the green area. So I'd like to see this thing hold off. So I'm not worried about a measly $100. If I want to give back this $100, that's fine because I have a way greater opportunity above me, okay? Next up is NVIDIA. Now, we're up $647 total on this trade so far. For the day, I'm down about $80. Now, again, guys, this NVIDIA has gone straight up. So I'm trying not to look at my P&L. Obviously, I brought up the P&L because it's a tasty little treat for newer traders. They can see the potential if you stick with this, how much you can learn, and how much you can actually make, while you're trading in this. So I've only been holding on to this thing for 3 trading days. If you add the weekend, five days total, and I'm up, $652, which is, it's almost a paycheck, in one trade and one stock. Now I have made another additional $300 or $400 on this trade in total because I've already paid myself into this. We bought in down here and I exited some up here. So I had a total of 25 shares of this, but I sold 15. I paid myself. And then now we're trading higher on these last 10 shares. I'm still up another up another $652. So I want to hold on to these shares for the longer run as well. So I'm going to hold on to this until it breaks that 10-day moving average. So let's keep on keeping on. Let's see if NVIDIA can just trade sideways for me. I'm not expecting NVIDIA to launch higher. I don't want it to launch higher right now. I want it to trade sideways and actually show constructive movement. We also have Abercrombie and Fitch. We're up $101 on this. Yesterday, it had a nice pullback while the market was ripping, so that doesn't show me too much confluency. We want to see it going up when the market goes up. I'm only going to hold on to this for until the 28th. So we'll see. We'll see what happens there. So ANF is looking good. I have not paid myself with this one yet. This one, I put this trade on just on Friday, I believe. Let's see, what's today? No, was it Friday? The 3rd. I put that on the 3rd. So yeah, it was Friday. So yeah, guys, that's what I have going on. I hope you learned something from this. I hope it was educational. If there's anything that you want me to add into these shows, remember, these are not just for me. These are for you too. So if you want me to add anything into these shows, just leave it in the comments. Leave it in the comments. Join the Discord. We share ideas. We try to make sure that as a collective, we have a better understanding of how the overall market is coming together. There's a few more things we could have went over today. We're going to save that for tomorrow's Discord. So we're going to get ready for our trading day. We got about 15 more minutes. And then guess what? We're doing live trading in the Discord, baby. If you want to be a part of that, go ahead and sign up for it. It's absolutely free. Absolutely free. Just click on the description, wherever that description button is, and we'll get you in here. Thanks, guys. Hope you have a good night. Peace.